Ladies and gentlemen, this is your teacher Osman Ali, and the video is related to the solution of the exercise 411. It is the preparation of the retained earning statement, and we're gonna learn two irregular items adjustment here. One is the error and omission, and the second one is the change in the accounting principle. So I would actually share the document of the one of the video by the name of adjustment of irregular items. So if you see, we have the last two items, errors and omission and change in accounting principle. Both of these adjustments should be done in the retained earnings statement, and it will be adjusted net of tax. Net of tax means after the adjustment of tax or after the subtraction of tax actually. So let's see, and let's go through the numerical, that what are the requirements of the numerical. So the company, McIntyre Company, began its operation on 1st of January 2007. And what they did is actually they had earned some net income profits, and they have paid dividend as well. So in 2007 they had an income of $40,000, and they did not pay any money out of that income to the shareholders. Then in 2008 they had an income of $1,25,000. Out of this $50,000 was paid to the dividend. Remaining 75,000, if you subtract 125 minus 50, so you get 75. Remaining $75,000 were actually retained. And in 2009 the profit which was earned, the net income was $160,000. Out of that $50,000 was actually paid, and the remaining portion was retained. Okay, then following information related to 2010 is given. The income tax amount is $2,20,000. And then look at this prior period adjustment. Prior period means previous year's adjustment. Understatement of 2008 depreciation expense before tax $25,000. It means that this is related to errors and omissions. By mistakenly we recorded less depreciation expense. Understatement means we recorded less, okay, depreciation expense, and this transaction is related to 2008. The amount is 25,000 and it is before tax, means tax is not subtracted here. Then cumulative decrease in income. Cumulative means combined decrease in the income. Decrease means minus, because decrease in income is a minus phenomena. From change in inventory method. Change in inventory method means change in accounting principle, accounting method. Okay, so that's another irregular item. And again $45,000 is the total decrease, and that's before tax. The dividend paid in 2010 is $1 lakh, and the rate is 40%. We are required to prepare the retained earnings statement for the company. So if you see here in the data, by the way, there is a year mistake here, it's 2010. So let's start the numerical. Now if I want to do the numerical of retained earning here, so from my previous exercise or video of exercise 4-8, you have gone through the basics of retained earning, what they are actually. If you have not watched that video yet, I would recommend that please watch exercise 4-8 video first and then come to exercise 4-11. Okay, so the very first sentence in the retained earning statement is actually the beginning balance. So let's go through it. The beginning balance of retained earning, and this is at the start of the year, so as of 1st January, and the year is 2010, so this would be 1st January 2010. Then we would write the dollar amount here. Now if you see in the numerical, there is no such information given, but there is information related to the previous year's performance is given. 2007 performance, 8 performance, 9 performance. So actually whatever you earn, out of that profits you give dividend, and the remainder is actually called as your retained earning. So let's calculate this thing, the retained earning. So what I will do is that I can make I can do a small extra calculation here. Okay, so I will write here year. So we have 3 years, 2007, we have 2008, and we got 2009. Okay, then we had another column by the name of net income. So we had a net income of $40,000 in 2007, if you remember, $125,000 in 2008, and $160,000 in 2009. Then obviously from this income we will pay dividend. So zero dividend was paid in 2007, where $50,000 were paid actually in 2008, and $50,000 were paid in 2009 also, which means that our retained earning will be 40,000 minus 0, 40,000. So we retained $40,000 from 2007. Then 1,25,000 minus 50 is $75,000. We retained $75,000 from here, and 1,60,000 minus 50,000 is $1,10,000. Money was retained from the income of 2009 actually. Okay, so if I total it, it becomes $225,000. This is the total retained earnings of these 3 years actually, and that's like end of 2009. So end of 2009 becomes the beginning of 2010. Okay, so I'm gonna shift this value of $225,000 to the beginning balance. Now if you remember from the previous video, exercise 4.8, that right after the beginning balance we do the adjustments of errors and omissions, one, and the second adjustment that we do is actually the change in accounting method or principle. So let's do the adjustments. We had a prior period adjustment of understatement of depreciation expense. So this is minus because I mistakenly understated that, recorded less. If I want to adjust it, then I have to record more. Record more means minus more. Why minus? Because it is an expense, depreciation expense. So minus adjustment. Okay, and this adjustment is of depreciation expense. How much was the depreciation expense money? It is $25,000. So I will write here $25,000, and then obviously net of tax means the adjustment of tax must be made. So the tax adjustment will be, or yeah, you can say the tax adjustment will be 40% of this, and that's $10,000. So when you minus it, you get $15,000 net value which must be adjusted. Then the next adjustment was cumulative decrease. Decrease means minus an income from change in account inventory method, $45,000. Okay, so I will write here minus because it's a cumulative decrease, and I can write here adjustment if you wish to write the word adjustment, otherwise that's fine. Okay, and then I will write here cumulative decrease in income due to change in inventory method. How much is that? The cumulative decrease in income is $45,000. So I will write $45,000, and then obviously tax adjustment should be done, which is 40% of this value. Okay, so if I multiply 40% with $45,000, so probably it's gonna give me a value around, okay, let me do the calculations first. Okay, so we get $18,000 the tax adjustment value. So 45 minus 18 becomes $27,000, and that's also minus. We discussed why. So 2,25,000 minus 15 minus 27,000 is equal to $1,83,000, which you can say or title it as adjusted balance of retained earning as of 1st January 2010. And then we would actually plus or minus if there is any income or losses and dividends as well during the year. So let me plus if we had any income. Okay, now if you see in the numerical, it says income before income tax was $220,000. Income before income tax, so this is the income of 2010, but this is earning before tax. So let's calculate the the net income. Okay, so EBT is equal to $220,000. So when I multiply, or if I want to calculate the tax expense, so that would be like I will multiply 40% with $220,000. When I multiply that, so I will get a value, and again I need to multiply that. So let me just do it directly in my computer right now. 220,000. So multiply by 40%. So that gives me 88,000. Okay, and when I subtract this 88,000 from 2,20,000, I get $1,32,000 net income. Actually, this is the net income. Okay, in this money was earned in 2010, so I will shift this money here. Net income $1,32,000, and that would be added actually to the figure, minus if there is any dividend paid during the year. So dividend paid in 2010 is $100,000. So I will write here dividend paid $100,000. Okay, so 183 plus 132 minus $100,000 is equal to $215,000, and this would be called as ending retained earning balance as of 31st December 2010. So this is it. We were supposed to prepare the retained earning statement in exercise 411, and we got it. The only extra thing we did was we just did the calculation that what is our retained earning balance at the start of 2010 and how much is the net income actually. Thank you very much, ladies and gentlemen. Stay safe.